I froze time, said I got a girl, but she don't mind. I've been up all night, the money never sleeps.
Ladies and gentlemen, welcome back to my YouTube channel. Today I am going to be teaching you all the terminologies you need to know as a forex trader. Let's get straight into the video. All these definitions are from my favorite investing site, which is investopedia.com. That is where I get all my terminologies that I am not familiar with. Me as a mentor, my job is to simplify these definitions for you and teach them to you how I understand them, and by doing that it makes it easier, because these definitions, they can get confusing at times, especially for a beginner. Let's start. Margin is the process of making a good faith deposit with a broker in order to open and maintain positions in one or more currencies. So basically guys, margin is the minimum amount. That they didn't involve that word in this passage. It is the minimum amount needed to open and run positions. Free margin is the money in a trading account that is available for trading. Margin and free margin are very similar. Let me go to my platform so I can show you guys an example. But today it is Saturday, which is a weekend, so I can't really open any trades. My margin is not displayed right now because I don't have any running trades. But if I were to have positions, let's say I buy Euro USD, and then my margin will be displayed here in this corner, up here in this tab. So once I open that Euro USD position, let's say my margin is $10. It basically means that I need a minimum of $10 in the trading account to keep those positions running. If it ever happens that the losses get below my margin, even if it's just $9 by $1 difference, I will blow the account. I will have a margin call. So margin is the minimum amount needed to open and maintain those positions. And then your free margin, it is the money available for trading. That is it guys. There is no really explanation needed there. Free margin is the money available for trading. So right now my balance is $30 and my free margin is also $30. It basically means that I have $30 available for trading. Let's move on to margin level. Margin level indicates how healthy your trading account is. That is it guys. It is basically an indicator. Once you open positions, you will see a percentage here in this tab. It basically shows you how healthy your trading account is. My personal preference is a healthy account is always above 200%. Once your margin percentage reaches below 0, you will blow the account. You will have a margin call. Leverage is the use of borrowed funds to increase one's trading positions beyond what would be available for their cash balance alone. So basically, think of leverage as a tool to increase your buying power. So you have multiple leverage options. Let me just give you a few examples. You have your 1 to 50, 1 to 200, 1 to 500, and the list goes on. As you can see, these leverages are in a ratio format. This is given to you by your broker. You can choose your leverage by your broker. So as you can see, in the first ratio, you have 1 to 50. It basically means for each one lot, What is a lot? You may be asking. So when you go to your platform, your MetaTrader platform, and you're about to enter a position, this is where you choose your lot size. So the number before the decimal point here, so this is where you put your full standard lots. And then if I were to place one lot here, that is one standard lot. So for each standard lot that I take, my potential profit or potential loss is multiplied by 50, and the same thing goes on. For each standard lot that I take, my potential profit or potential loss is multiplied by 500. Let's say you have two traders, trader 1 and trader 2. Trader 1 is using 1 to 500 leverage, and trader 2 is using 1 to 200 leverage. Trader 1 will make more money than trader 2 because trader 1 is using more leverage, and the same is true for the opposite. Trader 1 will make more losses compared to trader 2. Same currency pair, same strategy, same everything, just different leverages. Trader 1 will always make more profit on the same currency pair, the same strategy, the same setup, and trader 2 will always make less losses because trader 2 has less leverage than trader 1. When it comes to leverages, ladies and gentlemen, as a beginner, stick to smaller leverages because that way you're not risking a lot of money. But as you get more and more advanced, you can increase your leverage, but always remember you also increase your risk. Equity is the amount of money a trader has in their trading account, plus or minus any profit or loss from open positions. So right now, if I go on my MetaTrader platform, my equity is displayed there. So it basically means my balance right now is $30. Just to give you guys an example, it's $30, right? And if I were to open a position and it is in $5 profit, my equity will be $36, right? And then if I were in a loss of negative $5, my equity would be $25. So basically, guys, equity is the amount of money a trader has in their trading account, plus or minus any profit or loss from open positions, as I showed you in that example. And then pips measures the amount of change in the exchange rate of a currency pair. So it is a bit different for GBP JPY. So any currency pair that has GBP JPY in the currency, it is going to be different. For example, your GBP JPY, your USD JPY, any pair that has the currency pair GBP JPY is going to be a bit different. So it goes like this. You have your price here, you have these axes represent numbers. So for GBP JPY, any currency pair that has GBP JPY, we will calculate it by the second number after the decimal point. So if this number is 5 and then the price changes and then now this number is 6, it means that currency pair has moved up 1 pip. And then for any other currency pairs except GBP JPY, we measure it in the fourth number after the decimal point. So let me just give you an example. For everything else, guys, excluding GBP JPY pairs, let me just give you guys an example. Let me write it landscape to have space. So for any other pair except currency pairs, so if the pair that you're trading does not have does not have JPY, this is how it's going to work. It's going to be represented by the fourth number after the decimal point. So if this number is 6 and then price has changed as follows, so price is now on this amount, so now price is on the pip is now 7, it means price has changed 1 pip. And the same is true for the opposite side. If the pip is now on 5 and the next representation of the price is 4, that means the price has reduced by 1 pip. That is basically how you calculate pips. That is it, ladies and gentlemen. A wise man once said, do the hard work, especially when you don't feel like it.